So these Q&As are brought to you in collaboration with the Coaster Capital Growth Hub. The Coaster Capital Growth Hub provides a fully funded advice signposting service in Greater Brighton, West Sussex, East Surrey and Croydon to help small and medium-sized enterprises address business challenges. We'll circulate details of how you can contact the Growth Hub in the follow-up email we'll send around today. They're doing a lot of support for businesses at the moment and throughout the year. So please, I do recommend getting in touch with them as well if you're looking for business support in the area. I'm delighted to be here and joined today by Mark Horsfield, Business Manager at Plus Accounting, and Samantha Oakley, who is a consultant at Healy's Solicitors. So by way of introduction, Mark is the Business Services Manager at Plus Accounting, and Plus Accounting is a firm of accountants, business and tax advisors covering Brighton, Hove and East Sussex. And Samantha Oakley is a consultant in the commercial and contracts team at Healy's Solicitors. And Healy's are a UK leading law firm with international reach. So I will be asking Mark and Samantha some prepared questions throughout this session. So we've got 5 or so questions that we will cover. Hopefully lots of your top questions and thoughts. And as I've kept saying, there is a chance for you to ask your questions throughout the session. So please do pop them in the chat. If we are unable to answer any questions on today's call, or perhaps some of the questions you have are very, very individual to your circumstance, then we will put you in touch with Samantha or Mark separately and get a response to you via email afterwards. So there's a lot to cover in the next hour or next 50 minutes. So we shall get started. So the first question, it's over to you, Mark. What is IR35?
Yeah, good afternoon, everyone. Yeah, IR35, so off payroll working rules. It's where a contractor or a worker works for an end client and they use an intermediary. So an intermediary could be by way of their personal service company, so a limited company, could even be a sole trader business for another intermediary service like a employment agency or even a partnership, those sorts of things. Anything used to sort of separate them being employed as an employee. And really this legislation was brought in as a sort of tax avoidance measure. The government found that these contractors were saving a lot of taxes by not being an employee in an arrangement, which is very much like an employee arrangement. So as you know, you may well know that the employees are taxed very differently from if you're a self-employed or if you're a director shareholder limited company. The employee will get your income tax and national insurance deductions from your gross pay, and your employer pays national insurance as well. So there's 3 different taxes that you pay in employee arrangement. Depending on if you're self-employed or a limited company, that's quite different, especially in terms of limited company. Often people would have a mixture of salary and dividends. And dividend tax rates don't have national insurance contributed on them, and they're taxed at lower rates than income taxes through salary, and also the employer wouldn't then pay their side of the national insurance. So that's why a lot of people use that arrangement, and it's something that the government brought in to try and level out the playing field in those particular arrangements. Really, it's where they sort of closely match being an employee, and they've just decided to show the taxes matching as if you were an employee, essentially.
Brilliant. Thanks very much, Mark. So could you outline what changes are coming into force on the 6th of April this year and which businesses are subject to these new rules?
Yeah, so it has been off payroll rules in existence since about year 2000. So it's always been around, but it's never really picked up traction until about April 2017. When the government brought in new legislation which targeted specifically the public sector organisations. You may well remember certain news stories of famous news presenters on the BBC. Lorraine Kelly was one who got caught under it. All these news presenters were found to be using these intermediary services, and suddenly they started getting plucked on saying, actually, no, we want these amounts of taxes being due. Now, some of them won and some of them lost. That's just the way it goes. And so, as I say, from April 2017, it's always been based purely on public sector organisations. So what that meant was that the public sector was responsible for determining the status of their worker. So previously, it'd been the worker who's decided whether I'm separate or I'm an employee, and that's been that. But the public sector organisations had to decide if they meet the employee arrangement, and if they did, then they would have to start taxing them as such, in that they would deduct income tax and national insurance from their pay, which was bad news for the workers, because essentially you were doing the same job but for less money, which is why it's been quite successful for the government, which is why they're now expanding it from the 6th of April to include private sector organisations. So that's going to be a medium and large size organisations. It was supposed to come in 6th of April last year, but due to COVID, as with everything, it got pushed back. But now it is actually going ahead, not expecting any delays. So it's now going into private sector. So what that means is, if to be classified as a medium-sized business, is three conditions that would classify an end user as that. So it's a turnover threshold, which for a medium business is over 10.2 million per annum. It's also gross assets value, which is over 5.1 million. The gross assets will not include liabilities. So it's purely going to be their fixed assets, their cash at bank, their debtors, those sorts of things determines their gross asset value on the balance sheet. If you have to file a balance sheet, if you're a limited company, that's what you're looking for that criteria. And also average number of employees for the year. So that's over 50. And if they meet 2 of those 3 requirements, they're then classified as a medium-sized company, potentially a large size, depending on if they go higher. And now it'll be their responsibility to determine the status of the workers for any contractors or freelancers they use. So it's now their burden to decide, and it's no longer left in the workers' decision of what they do and what they classify themselves as. So potentially it could be, I've seen some cases, especially because it was going to be brought in last year, some organisations already started to do that. I mean, some banks automatically said, we're not going to take on any contractors. Those who had contractors in place then would look to set up an arrangement where they either became a fixed term employee, they went on to an umbrella company payroll scheme, or they no longer worked for business. That was the sort of blanket decisions they were sort of bringing in. So yeah, that's at the moment, it doesn't affect small size companies. So if you're still contracting with small size companies at the moment, you can carry on as they are. But if you're a contractor and you contract with medium or large size business, or if you are a medium large size business and you do take on contractors, you will have to then review the service contract you have and then decide if they now meet this IR35 criteria. If they do, you then start deducting tax and national insurance from their pay as such.
Thanks, Mark. I've got a follow-up question myself on that one. So you're saying at the moment, if you're contracting for a smaller company, you're kind of not covered by those rules. What's the direction of travel on that? Do you think that it might be expanded to smaller companies, or any indication of that at the moment?
Yeah, not in the immediate future, but certainly the way they tested the water with the public sector, that's worked well for them. Now they're going to push it onto medium and large size businesses. If that works out well, eventually I wouldn't be surprised if it goes the whole hog and includes small size businesses as well. Ultimately, the rules are still there and they're still the same. If you're in an employment style contract, you should be deducting tax and national insurance. It's just the the evaluation of the contract is who's responsible for it. But I wouldn't be surprised going forward if a couple of years down the line, maybe, that if it goes well with the medium and large size businesses, they bring it into small companies as well. Obviously, it is a big issue because many businesses use contractors and freelancers to help them with the workload. So we wait to see what happens with sort of the commercial aspect of what happens to these medium large size businesses in terms of what they're able to do and those sorts of things. But yeah, if it does achieve what the government hope it will, then I wouldn't be surprised if it gets brought in further down the line for small companies.
Brilliant. Thanks, Mark. I have had a couple of questions come in, but I will get to those at the end because I know we're on our 3rd question now. So I'll ask those very shortly. So over to you, Samantha. So what are the implications for freelancers and contractors? Big question there.
Just going to say hi, everyone. Yeah, so in essence, what it means now is you'll have to check your contracts, you'll have to check your contractual provisions, but actually more importantly, you have to check the reality of your arrangements. So one of my most favourite phrases is lifting the veil. We talk about lifting the veil, and basically what that means is, on the face of it, you might say somebody's a contractor, a freelancer. You might have a contract that's headed up, you know, freelancer contract, for example, or consultancy contract or something. But if the reality of the situation is that, you know, but for the name of that contract, that person is in effect acting like an employee, then they should be taxed as an employee. So, you know, that's sort of picking up on what Mark was saying. What they've actually done now is shift the burden and the emphasis as to whose responsibility is to make that determination. You know, it was arguably it's much easier if you were the worker deciding yourself whether or not you're a freelancer or contractor. When that burden shifts to these larger size organisations that Mark was talking about, then actually that's where there's perhaps been some implications around people looking at their workforce and, you know, whether or not they should be employing people instead of hiring contractors and freelancers. So I think that's one of the first implications. As I say, the other thing is, when you do lift this veil, when you look at the reality of the situation, then what you have to look at is things like the exclusivity of the arrangement. You know, can you work for many other different people, or are they, you know, are you effectively exclusively providing your services to these people? You know, things like length and duration of contracts. Again, if you're working for one person for 12 months, in effect you're an employee. So, you know, I you know, particularly in tech and IT, I've worked in many organisations where I've worked alongside somebody, assumed they're an employee, and then it turns out, you know, they're actually technically have been a contractor or freelancer. So, you know, it's those kind of things that because I do remember a few years ago, there was a trend for stopping people's contracts at 11 months, thinking that got you around the rules. But unfortunately, you know, those things don't work anymore. And then, you know, it's things like, you know, who's providing the equipment. Again, if you're sitting in an office using somebody's computers, their telephones, everything else. Again, just taking your own laptop in might not necessarily get you around that, but it'll basically, what they do is look at everything in the round. And, you know, if to all intents and purposes you are acting as an employee, then that's when you might come inside IR35 and have to pay the tax accordingly. Another implication is one of the tests around this is the substitution, and that's what causes a lot of issues, because of course if you're the contractor or freelancer operating via your own limited company, for example, and you're the only person, so you're providing services via your company, but really you're the only person in that company, there can be real issues around how you could potentially substitute out your services. And I had one last week, for example, where the contract had come through and there were lots of clauses around if somebody was off sick, which again, you know, if somebody's strictly a contractor or freelancer, those provisions don't really apply. You know, I totally understand that if you are the person engaging somebody's services, you've got a project, you need it, you've got deadlines, you need it to complete on time, but you can't then have signed provisions around what will happen if you're off sick, because, you know, that's more applicable in an employment scenario, not a freelance scenario. So there's little things like that that sometimes slip through the system that you don't necessarily think about. So I think it's things like that that we need to sort of stop and think about now. And you know, so, you know, if you've got a long-term partnership with a client or company you've been working for a long time, you know, maybe you need to stop and think about that. Like Mark said, you know, another common way is if people wanted extra manpower for a time, then, you know, traditionally you bring in contractors and freelancers. Or the other one could potentially be retainers going forward. Again, you know, depending on how the retainers set up, could depend on whether or not you could in fact be a de facto employee. So yeah, those are the things I think we need to sort of think a lot more carefully about now.
Thanks, Samantha. I think those examples are really thought-provoking, perhaps things that hadn't been considered. Thank you. So my question to you now is, so with all of this new regulation and probably a lot of nervousness, let's say, can businesses continue to hire contractors under the new rules, and what might that look like? Yeah,
so the short answer is yes, but it just requires a bit more thought now. I think it would require, if you're already in a situation review, if you're getting into a situation where you're about to sign up to a new arrangement, then it's a sort of stop think moment. So as I say, it's not that you can't enter into these freelance and contractual arrangements, but it's just a case of stop and think about it. There is a tool on the government website called Check Your Employment Status tool. It's useful in a sense that there are some questions in there that make you stop and think. So there are some thought-provoking ones. It's not necessarily a guaranteed yes, no, but it does sometimes help you to stop and think, oh, actually, I hadn't really necessarily considered whether I'm expecting this person to effectively be available to me 9 to 5, even though they're nominally a contractor, because of the size of the project and the deadline, in effect, it means I need their time 9 to 5 for the next 3 months or something. So yeah, just sort of do those kind of initial assessments, I would say.
Brilliant, thanks, Samantha. And now a question to you, Mark, about I guess decisions that are made on IR35. So, can contractors or freelancers challenge any IR35 decision? So, if what happens when it perhaps doesn't go the way you think it might?
Your short answer will be yes, but it might be quite difficult to do so. So, what you should get when if you are a contractor or if you hire contractors, there should be a status determination statement. So that should be issued to all the contractors. If you're a medium and large size business or a public sector organisation, should issue that to the contractors, and that should outline what they consider your status to be. Now, obviously, if you disagree with that status, you can appeal. It is sort of a client-led appeal process. HMRC are not really getting involved. They're happy to take the tax that you have to pay, but they're not going to get too much involved in the appeal process. So if you do get your status determination and it says the IR35 regulations apply, you say, actually, no, I'm pretty much a guaranteed business. I have disagree with what you've determined. You would have to write to them and say you disagree, and the reasons for your disagree. As Samantha said, there's a CES tool you can use, which will help put into your argument. Obviously, you can't take that as gospel, so you sort of have to use it as a basis for your arguments. You may need to seek sort of expert help on putting your argument together. But if you feel you have a legitimate case, write to your end client to disagree with that. They then have 45 days to respond to your request. So for the medium-sized businesses, if they have got a lot of contractors and then they get a lot of appeals, they have to address them on an individual basis. They shouldn't be blanket decisions. They should be based on their personal circumstances or who they're contracting. So, and that's really as much as we know for the moment, in terms of they would then have to look into it, consider your argument. They might either then change your status determination and then advise you of the change and the date of the change, or they might actually say, no, actually, we're continuing as we are. We believe it's the case. HMRC haven't as yet identified in those scenarios where you've appealed and they've said no, what you then do after that. It's likely there will be an appeal process further up on there. But at the moment, they're sort of pushing it towards the medium businesses. You deal with this. It's your client, your worker. You have a look at it and then decide there. Obviously, so the cases that have been for the public sector organisations, obviously, I mentioned Lorraine Kelly's one, obviously she did appeal and then she won. not every contractor is going to have the resources available to put a legal team together. I guarantee that she didn't look up the rules and identify what her case was. So it's whether or not you can then afford to seek expert opinion on your status case. It's whether or not you want, one, to go through the hassle, because there'll be a lot of time involved, and two, the financial side of it. Do you need to bring in expert help to help you with your determination? Because unless you go at it with a sort of full sort of argument sake that covers every angle, you're probably unlikely to be successful. So you have to sort of consider those arrangements. I mean, what I say, there's no, they say, oh, it says in the contract there's no substitutes allowed, blah, blah, blah. There's no IR35 proof contract. So if you're basing it just on the contracts, that's not going to work. You need to look at the actual working practices you have and then sort of work on that basis. So Samantha says, you've got using your own equipment, all those sort of points you've got to list together in your appeal and list them out. And then if you get a change of determination, then great. But at the moment, it's not clear on, if you get a no, where you would go to after that.
Can I just follow up on that as well with a quick point as well? So on the contractual side of things, there's usually an indemnity provision in there, and it's been standard wording for a long time, and a lot of these contractor contracts around, you know, if there's claims against you, depending on which side you are, depending on whether you're the end client or the contractor, but if there's claims against you in relation to tax, then, you know, one will indemnify the other. At that point, I will decide who I'm acting for. If I'm acting for an end client, I'd probably try and beef that up. If I'm acting for the individual contractor, I might try to water it down, or vice versa. So that's one thing to look at, I would say, going forward in contracts as well, is what you can do around those indemnity provisions, because as Mark says, you know, it's not guaranteed what your status might be in the first place, and it's not guaranteed what might happen after an appeal, because ultimately, if you're on the wrong end of an HMRC investigation, you'll just have to go with, you know, whatever comes out at the end of that investigation. But, you know, one way, particularly if you're the end client, of actually addressing that could be to look at the indemnity provisions in your contracts.
Brilliant. Thank you to you both there. Brilliant. We've had quite a few questions come in as predicted, which is why we've left plenty of time to look at these for you. So I'm going to go through pretty much in order as I've been reading them. So hopefully this will be relevant to many of you as well. It might be what you're thinking. It's always the case. Somebody else often asked what you would like to. So I think that you reiterated this point a number of times, but one of the questions or comments that we've had through is, you know, surely if we're not receiving any employee benefits like holiday, sick pay, maternity leave, insurances, health benefits, pensions, if they're not getting those, then surely you're not an employee. But yeah, I think you have kind of mentioned that it's not just about those things. But yeah, can you expand on that a little bit, Cora?
Yes, so actually what's not been thought through yet is the distinction between, so IR35 is a tax thing. So if for tax purposes you're determined to be an employee is one thing, what's not been thought through is the knock-on implications of whether that then gives you employment rights. So there is a slight difference. And again, what you could potentially argue, arguably, if you're determined to be an employee for IR35 purposes, that hopefully gives you a strong argument to say then for employment rights purposes. And the employment rights stuff, so I'm sure you've heard of the Pimlico plumbers, the Deliveroo and the Uber case very recently. So they've been on that side of the fence, but the tests and the principles and the things you look at of, is somebody actually an employee or not, it's all the same, it's slightly blurred. So yeah, it's interesting they're coming at the same time.
Yeah, thanks, Samantha. It sounds like we might be doing a Q&A on that at some point in the future as well. Brilliant. So the next couple of questions we had come through were about which businesses this applies to. So perhaps this is for you, Mark. So will this affect the charity third sector? Do they come under public sector? Do they come under private? Does it apply to registered charities?
Yes, it should still apply to registered charities. Obviously, it depends on the size of the charity as such, but it should still apply to charities. So again, they'll have to determine the status arrangement in place, and yeah, the same rules will apply for them. Very similar to the public sector.
Thank you. So the next question is, on the government website, you can get a certificate that states you're outside the IR35 scope. Would this allow me to work as outside IR35 for larger companies? What is it? Is it good? Should we get that? Samantha?
Should I take this one then?
Yeah.
Funnily enough, we were talking about this. We were talking about this exact thing before we actually started this webinar, because HMRC have carefully caveated it to say that yes, you can use the tool and it's an aid to a decision-making process, but if you've inadvertently or knowingly or negligently put in the wrong information, then they're not bound by that outcome and determination. So, and as I say, it's 9 times out of 10 it'll be you'd inadvertently not realised. As I say, something like you might not realise the knock-on implication of a big project to be done in 3 months means that somebody would have to be working 9 to 5. So you might not have specified the hours in the contract, but in effect you are specifying somebody's hours. So how you answered the question on the CEST tool, the check your employment status tool, which gives you that outcome, you might have thought you'd answered it honestly, but you may have inadvertently not answered it correctly.
Yep, brilliant, thank you. So this is an example here. So this person works with a copywriter based in South Africa, and he works for this person, so which is a limited company on a variety of different projects, but he is not his anchor client, so this person clearly works with other people. Would he potentially be included in this arrangement, or what questions would that person need to ask to determine that, I guess?
Yeah, it's going to be on a case-by-case basis. So if you invoice different clients, it will be up to their clients individually to determine your status. You're not going to have a blanket say, oh, I'm IR35 for one, that means I'm IR35 for all of them. It's very much going to be dependent on the size of the clients you're working for, and their own sort of circumstances on the working arrangement you have with them. So you might have different working arrangements when it comes to hours you're working, project length, and all those sorts of things. So you sort of, again, it adds to sort of the admin side of, you might have different results from different cases. So those, and it might be a case of it's true on both cases, really. You could have jobs that are within the regulations and then jobs that are outside the regulations, and you just go along with it because there's different circumstances for that particular role you're working on. I say, if you're operating for a limited company, you do have, if all of your work is solely under IR35, it begs the question of whether or not you need to have your limited company more, because that was the whole idea of having that, is the way you tax yourself from that personal service company. And if all of your income for that limited company has been taxed at source, you won't have corporation tax to pay, and you won't be able to take anything out as dividends as such, because you would have already been taxed on it. So if that is the case, and it is your arrangement, and you're solely with companies who are applying IR35 regulations for you, it's almost as if it's not having that worth having that limited company, because you will have costs to running the business in terms of administration, accountancy fees, all those sorts of things, bank account fees, and it's actually no benefit for you to do so. Obviously, there might be a limited liability reasoning for you to do it, but that begs the question of whether or not you need it. If you've got a combination of both, it's sort of weighing up the balance of how much work are you doing under IR35 and how much you aren't, in terms of the tax implications of it. But yeah, if you are in that position, you sort of have to look at each individual case.
And does it matter, because I think one of the points there was that essentially a contractor wasn't based in the UK. What's the kind of status for what's the situation for
for non-UK based clients you're working for? Essentially the IR35 regulations wouldn't fall for them because they're not based in the UK. There'll be a different set of laws depending on where they're based. So this is purely focusing on UK based or private and public sector organisations.
Great, thank you very much, Mark. So the next question, bear with me, it's a little bit of a long one, so I'm going to do my best to paraphrase and hopefully get across the gist of it. But as I've said as well, if it does get too individual or too complex, we can take it. I don't like to say the phrase offline, because nothing is offline at the moment, but we can take this separately. This instance is a business providing digital marketing services. So this is who the question's from, providing digital marketing service to a large corporation. So clearly would fall under that bracket of employees and turnover. Their marketing services are all time-based. The corporation couldn't get their head around them being a services provider like an IT company, and they forced them down the onerous non-payroll contractor route. What does the new kind of regulations and current line hold for providing this ongoing services, and what should this company do to make sure they're kind of approaching it legally, either insisting for a services contract instead of the payroll contract? Who wants to take this, Mark or Samantha?
I don't mind. So in essence, it seems to me it goes back to the point we made at the beginning, that the emphasis has now shifted to the size of the organisation. So actually, if it is a medium or a large size organisations based on the thresholds that Mark mentioned earlier, then actually the burden, as far as I understand it, the burden shifted to them to make the determination of worker status. So actually it should be them who are saying, we believe that you're either within or outside IR35, and then we come to the appeal question, because if they say you're inside and you don't want to be, or if they say you're outside and you do because you think you should be an employee. So that's the theory. Of course, the practice is a lot harder to have those conversations, because, you know, especially when you're trying to win work, you don't, you know, it is tricky having a conversation about, you know, should I or shouldn't I be within the rules? And nobody really wants to bring this up as an issue, risking losing the work in the first place. So I accept it's a tricky conversation to have. And if it is one that needs to be had separately, happy to do that. But as far as I see it, the basic principles are there, that because they're a larger size organisation, it's their burden to do the determination.
Brilliant, thank you, Samantha.
Can I just add, actually, I think it's difficult because when it was brought in for the public sector, there was a lot of caution in the public sector just to put everyone on the IR35 regulations, because they didn't want to be a public sector being seen as using tax avoidance schemes was a big no-no. There was a thought that private sector might be a bit more reluctant to put people on it because of the tax implications as a result. It could be more costly for them, and it's more costly for the workers. And the risk I've sort of noticed, I've got a friend who's an IT contractor for a large organisation, and it was a sort of blanket approach to being, you're all going to be under it. Now that is a big issue for those, if you're not the icon, you are a legitimate marketing consultant, that you get caught under it as well. It's it's a case of using the appeal process and try and put your point across. So I hope they listen, because they shouldn't be doing blanket determinations. They should do it on a case-by-case basis.
Thank you both for that. So next question is around the concept of substitution. So this person works as an associate for a training company, and if they were given work but was off sick, they would probably ask another associate to do that work. What does that mean in respect of IR35? Basically, this person also works directly for organisations, and if that person was off sick, for them, they may be able to find another trainer to do it, but it's not included in the contract. It's just an arrangement, I guess, they have. Should it be as well? So 2 questions.
Yeah, so substitutions are an interesting one. Again, it always depends which side of the fence you're sitting. So if you're the end client engaging the services of a specialist, then actually you don't always necessarily want somebody to be able to be substituted. And if you're trying to deal with the substitution point, then again, in your contract, you would have lots of wording around to make sure that substitute is suitably skilled and qualified, and actually you're responsible for your substitute. So that's looking at it from that point of view, which is slightly easier. Then looking at it from the other point of view, when you are the contractor or freelancer, you know, again, I have a lot of sympathy for it's not always necessarily easy to identify who your substitute might be. So again, it might be worth thinking about. And, you know, as this, I think this person alluded to the fact that there's an informal arrangement where they might be able to call upon somebody and say, look, can you just step in? Because unfortunately life happens and some things happen, and sometimes you do need people to step in for you. But again, what I would say there is you'd probably want to firm up that arrangement and put it on a slightly more formal footing, because when you're putting a substitute in your place, they become you in effect. And, you know, there's not only are you, there's responsibilities around, the quality of the work and deadlines, etc., etc. There's quite often a reputational issue as well, because especially if this is a long-term hard-won client, you want to be careful about who substitutes are. So again, I think it's one that's, I think this is why it's thought about in terms of larger and medium-sized organisations, because of course, substitution's easier because there's probably lots of employees floating around, but it does become tricky when you get to the thin end of the wedge, where it's us on our own, and how do you actually deal with that? So it's not always an easy answer.
Brilliant, thank you very much, Samantha. So my next question is about being a sole trader. So can you confirm that if you're a sole trader who provides services to a number of different companies, that IR35 isn't applicable to them? Is that right?
It still might be. Even if though you are a sole trader, so you are being taxed closer to an employee than, say, a director shareholder will be. However, your end client won't be paying employers' national insurance on the invoices that you send them. They'll just put that through the cost. So again, if they are sort of UK-based businesses and they are medium to large size private sector, it would be a case-by-case basis. So it still would apply for a sole trader, even if you're not doing it through a separate limited company. Appreciate the taxes you're paying as a sole trader are very similar to an employee's for income tax rate, slightly different on national insurance, but you still pay it. The employer themselves don't pay any national insurance on the invoices you raise to them. So it still could be a case of that might apply. So it doesn't mean you're outside it just because you're a sole trader. Okay,
thanks, Mark. So the next question is around calculating equivalent salary as a fixed term employee. So I hope you have got your mathematical equations at the ready. So this person has been working as a contractor through their own limited company for a day rate fee of a certain amount per day. How would they calculate the equivalent salary as a fixed term employee?
Yeah, so you're deducting, depending on the level, the sort of tax rates you're under and the level of income you're getting. So the income tax rates are at 20%, 40% and 45%, depending on what threshold you're under. And then you then have employees' national insurance, which is at 12% on a certain amount above about 8,800. Obviously, income tax, you have your personal allowance of 12,500, 12,570 when the massive increase we had from the budget. So that's what you're basing it on when you're getting those salaries. So if you had an invoice for £10,000, you're taking off 20% from income tax on the 10,000 minus your personal allowance, and then the 12% on that as well, based on the national insurance contributions. So they're really the rates you're looking at, to then compare against the rates you would have been, say, if you were would have received that via dividends, you would have been paying 7.5% through dividends, as well as 19% corporation tax. So that's sort of the differences in there in terms of the tax calculations as such. It's difficult to, unless I get up a spreadsheet to show the actual differences, but yeah, those are really the rates. Obviously, if you then go to higher rate, you're then looking at 40% of that amount there of the higher rate threshold. So they're the considerations really when comparing the tax implications. There are many good calculators online. If you just Google IR35 tax implications, you can do a comparison of what it's now going to cost you compared to what you've done previously, and then find out the tax implications there.
Thanks, Mark. Next question is about umbrella companies that you mentioned before. Do you have to work under an umbrella company if you go within IR35?
You don't necessarily have to. I think it's one of the options that they often put you on, what they have put you on when it's become when they changed your status, really. When you first come in, the options were you invoiced them as normal, but you had the deductions at point, or they put you onto a third party umbrella company payroll scheme. So you essentially were an employee, you just got it deducted at source. Or the other option was you can no longer sort of contract with them. I think it's really much dependent on the client you're working with. If they've got an umbrella payroll company set up and you can move on to that, then you can, but you don't necessarily have to. But if you don't, then you have to, they will deduct in tax and national insurance from the invoices which you raised to them. And you have to make sure you account for that on your either tax returns or your company accounts, depending on which way you're working.
Excellent. Thanks, Mark. I've got a follow-up question on the issues of umbrella companies. But before I ask that question, I just want to say I've got a couple more questions to ask in the chat, but then nothing else. So if you have got any questions that you want me to put to Mark and Samantha, then please do pop them in the chat. We've got a bit more time, but I will close up after that if we don't have any more questions. So yeah, please do pop that in the chat to me if you can. So the next question is around, so why does the use of umbrella companies help resolve this IR35 compliance regulation? And is there a limit on what you should pay them? Could a person set up an umbrella company and pay myself through them?
I think with the umbrella companies, it's because you go onto a payroll scheme. So essentially you get taxed as if you were an employee. That's the whole idea of what they're trying to bring in. You obviously could, if you set up your own company, it's still in the same situation of you're invoicing from one company to another, but you just have to apply the payroll yourself. So you'd have to make sure you deduct the employee rates rather than take any profits out of the company. So really, a lot of organisations initially set up the umbrella companies so that they could put them onto a payroll scheme and then process the payroll deductions themselves through that, rather than deducting it from the invoice and then paying it across. It was a lot easier for end clients to do that via a payroll scheme rather than doing it separately.
Absolutely, thanks, Mark. So there hasn't been any other questions come through just yet. I will give it a moment because I know sometimes they don't come immediately to you. But yeah, Samantha or Mark, is there anything you want to add before I wrap up? We've covered a lot, haven't we? So it's fine to say no.
I think it's just a case of when good communication with your end client, if you're a contractor, or vice versa, the other way around. It's important just to remain honest and transparent with your circumstances. The idea of you're not trying to sort of cheat your way around it. I think if you're honest, transparent with each other, you'll get to the right determination, and there won't be any tax avoidance implications as a result. If you start delving into the arrangements of, I need to put this clause in because I can get around it that way, I don't think it's going to work, and it won't be in your interest to do so either. Because if you get found out in those arrangements, they'll try and claw back the tax that you should have paid at the time, if they feel you've made the right determination. Obviously, the risk of that happening, we're not sure, because there'll be a lot of cases they'll be looking at, but that's the risk. So it's important to be honest with yourself and your client you're working with to make sure that you come to the correct working arrangement that's in place for your circumstances.
Thank you, Mark. Fantastic. Well, oh, there's one question come through just now. So I guess related to that, is there any risk to the client? That's all the context I've got for that question.
Yeah, there is a risk, because if you do a determination and you say it wasn't applying, and then it gets HMRC investigate the arrangements, they will try and look to claw back taxes from when the first status arrangement was based. They will look to backdate it. So there's a risk you'll have to pay the taxes that would have been due at the time you had the status determination, and subsequent invoices and stuff since then. Obviously, the end client's got a risk of they also would have had tax due, and there might be might have to backdate a tax payment as a result. So there is a risk both sides. to make sure you get the determination right first time round.
Thank you, Mark. Brilliant. Okay, so we have finished with the questions. I do know how these things work, so if you do have any burning questions that you didn't manage to ask or you think of later, either get in touch with me and we can pass on your query to Mark and Samantha, or have a look in the follow-up email and we'll share the contact details of both our brilliant experts today, so you can have perhaps a more tailored individual conversation, because as I think we've established, there is no, there's every situation seems unique. So yeah, brilliant. Well, a very big thank you to you, Mark, from Plus Accounting, and Samantha Oakley from Healy. Thank you so much for your time today. And a thank you to Coaster Capital for supporting these Q&As. So for those of you who are new to Brighton Chamber and perhaps haven't been to one of our events, we're a membership organisation that exists in Brighton to help businesses thrive and grow. We run networking, learning events and opportunities. So if you have found today's session useful and you want to know a little bit more about what we do and how we might be able to help you as businesses or contractors or freelancers, then check out our events calendar, or perhaps sign up to our mailing list and find out what's coming up. There's plenty of things to help you at a time like this, and also looking forward in your business as well. So a few events that we have coming up that may be of interest to you. Our next Q&A in these Q&A sessions is about getting back to work safely. So we're at that time in the roadmap where we can talk about getting back to work safely. So we are going to be covering topics such as testing, vaccine rollout and take up from staff, safety measures and flexible working in the next Q&A on the 7th of April. So that is free and open to all, so hopefully I will see you there. And on the 15th of April we have a Your Questions Answered session, part of our From Brighton with Love series on the UK's new immigration system. So again, free and open to all, so check that one out. And for those of you that are looking for great business support for either early stage or growing businesses, we have a fantastic program called Catch the Wave, which is running from November last year to July this year, and it includes one-off workshops. So whatever stage business you're at, please do check out those sessions. There's mentoring sessions as well attached to those. So thank you for joining us today. Speak to you soon. Take care.